Gang, what's up? Mike Ledward here, head trader at True Trading Group. It's January 28th. Today's a red day for me. It's a small red day. Definitely smaller than my tip than like an average red day for me. It's not really anything to really worry about. Today is day one of the 2-day Fed meeting. We got Fed announcement tomorrow. Things usually chop around a little bit over those 2 days leading up to Fed meeting. So action was pretty crappy today in the morning. We did have a recovery day in the SPY, but this video, I'm going to talk to you about identifying primary and secondary support levels and how to use them and what the difference is between those two levels. So this is going to be a pretty cool video because I used secondary support levels to identify a pattern and get long on MGEN today, which ended up giving me a pretty nice move. It was a real slow, low volatility, just kind of a steady climb higher on MGEN. But I traded a few other things today. I traded VTRX, I traded Tesla, but I really just couldn't get anything going. This morning, we had a lot of failed breakouts. Or not necessarily failed breakouts. We had a lot of failed patterns. There was a lot of really good setups in the morning that ended up failing. A lot. There was a lot of really good setups that I saw, not necessarily ones that I traded, but like a lot of good setups that I just saw that ended up failing and didn't really pan out. So today was kind of a funny day, but sometimes you get action like that when it's Fed day. If you guys are new to the channel, make sure to subscribe to get all of my free technical and mental lessons that I'm constantly putting out on the regular. And make sure you guys smash that like button for me. Comment below. I answer every single one of your comments. If you have questions or anything, comment below, and I will get back to you within probably the next 24 to 48 hours. I promise. All right. Now, moving forward, let's get to first, before we get into the lesson with MGEN. MGEN was actually my third trade of the day. Let's talk about my first two trades. I'll run you guys through them just to show you like what it was that I was doing. I'm sorry, not VRTX, VK. Yeah. Why can't I think of the symbol? VXRT. That's what it was. I can't even remember the symbol. Jesus. Okay, VXRT, guys. For VXRT, I was playing this for a gap move. I was playing this for a gap move, and we didn't get it. The pattern ended up failing, and this is what I mean by a lot of setups. A lot of good patterns and a lot of good setups ended up failing today. It's just kind of one of those days. Sometimes, like, there's no such thing as a fail-proof pattern. Even sometimes the best-looking setups, even sometimes the best-looking setups can fail, and that's kind of what we saw here today. VXRT. I'll take you guys to the daily chart first. It's important that we go out to the daily chart because this is the gap at $1. Okay, here's that gap at $1. We had this gap down day in April, and for 2 consecutive days, high of the day was spot on exactly $1 to the penny. And I was thinking to myself, if we are able to get through that level, we were gapping right beneath it this morning. Okay, I'm trying to get this to line up right at $1 even, and it's not working out with me. It's like it keeps going to $1.01. Let me zoom in. All right, there we go. Excuse me, guys. Sorry about that. Okay, so there's the gap entry. And I was thinking if we were able to get above $1, I thought we had a chance to push up into this gap. We gapped up today, and we were gapping right beneath that level. So when I take you guys back to the intraday chart, and let's go back to the morning. Here's the morning. We opened up below that level and then pushed right through it. So when we pushed right through it, I was patient with it. I waited. We pushed through that resistance at $1. We went up to like $1.06, $1.07, $1.08, pulled back in. You know, it was like $3, $4, $2, $4, $3, and there was support stepping in there in front of $1. So I said, all right, you know what? That support's there in front of the $1 level. I'm going to go ahead and get long. And I went ahead in here and I got long at $1.04, and I was looking for a move up towards like 120s. All right, I'll take you guys to my chart announcements. I'll zoom in so you can see better. Long here at $1.04, stop loss 95-cent area. You can see then we pulled back in to retest. Okay, we pulled back in to retest that gap entry at that $1 level. We held it for about 15 minutes, and then we just weren't able to hold. Bang, you get that break down below that level, and I just exited out the position once that $1 level did not hold. Back to my chart downs, you can see sold out at 94 cents. All right, so there I am long at 104, sold out at 94. And the stock just did nothing else for the entire rest of the day. Did nothing. So I thought that if we held that gap entry, that we got a chance to push, but no dice. So I took a loss on that one. And then Tesla, another good setup. I took a loss on this one, and then I made some good money on MGEN. On days like today, guys, you really just want to focus on staying disciplined and managing your risk. Like I said, it's a red day for me, but I didn't get hurt. A lot of patterns ended up failing. I stuck to my stop losses. I managed my risk. 2 red trades, 1 green trade. So yes, it's a red day, but it's not anything that I need to be worried about or concerned with or angry. I'll come back tomorrow with the Fed decision, and then hopefully things just kind of open back up after the Fed decision, and we'll see. We'll get some more updates on the coronavirus. We just had a slew of earnings come out: Apple, eBay, Starbucks, AMD. A bunch of companies just reported earnings, so we'll get some pretty good action. It's just today just wasn't my day, and on days like that, you just have to be able to manage your downside and not get beat up or not get killed from death by 1,000 paper cuts on days like today. So here's Tesla, guys. Tesla was very strong today. Tesla had a nice big gap up. We pushed higher. And I actually thought that Tesla had a chance to get back into the 580s today. I thought Tesla had a chance to get up into this region today. So when we opened up, we had a nice strong push. We pulled it back in. Then I was looking for like a double bottom gap up pattern here. And then here comes your trade line underneath. And once this trade line came in here and started acting as support, I jumped in here long. All right, I jumped in long right there on Tesla. Take it to my announcements. You can see I'm long at 569.75. And what I was looking for was for the trade line to cross over VWAP. And I thought that Tesla had a chance, okay, to get back up in here like this and get back up towards the high of the day. My first take profit, if this worked out, would have been in front of the high of the day. And then my next take profit would have been a new high of the day. And that was the move that I was looking for. But again, no dice, didn't get it. So what can I do? Just stick to my stop losses, manage my risk accordingly. And right here, guys, on that new low of the day, I exited that position at 566 on the button. All right, 566 on the button. So again, here's the long, there's the exit, and you can see Tesla went much lower. So again, glad that I'm sticking to my stop losses and just managing my risk. If I don't get the move I'm looking for, no big deal. I'm not going to sweat it. I'll just manage my risk and control my downside. Now let's go to MGEN and let's talk about identifying primary and secondary support levels. All right. When you are conducting technical analysis, finish the job. What do I mean by finishing the job? Conduct the full analysis. Don't just stop when you identify one level, because oftentimes stocks will set up multiple levels. If you watch my video that I put out yesterday, I talked about how to identify afternoon setups, and part of doing that is identifying key support levels during lunchtime. And you want to see if the stock is holding above key support levels. In order to do that, you first need to identify those levels. So when you're going through your technical analysis, what I mean by finish the job is don't half-ass it. Don't just identify one support level and that's the basis of your trade, because oftentimes there will be more than one key level. In the case of MGEN today, the primary support level, which is your first level, was broken, but your secondary level held. Now, the primary and secondary support levels on this setup were very close to each other, only about 7-cent difference. I'll show you guys in a second. But if you're not aware of that secondary level, you may be setting your stop loss too tight on your position. So for those traders that get stopped out too soon, or you get stopped out early on a trade, you may not be properly identifying secondary support levels, and you might be setting your stop loss too tight, getting stopped out when that primary level is broken, and then see the stock hold that secondary level. Now, when a stock has tremendous momentum, it's not going to make it down to that secondary level. That primary level is going to hold and the stock's going to continue. But sometimes you're going to get a little bit of a deeper pullback and that secondary level will hold. That means, and the pattern will still be intact and you can still get a really nice trade. And that's what happened to me today on MGEN. So for those traders that end up getting stopped out and you see the stock continue higher without you, if that happens to you often, it could be because you're setting your stop loss in the wrong spot. And that's why I want to talk to you about primary and secondary support levels in this video. Now, let's go to MGEN. This is a type of a TGG triangle. TGG triangle is my favorite setup. If you guys aren't aware or familiar with the TGG triangle, it is my favorite setup. It is the only, if someone says to me, Mike, there's only one pattern you're allowed to trade for the rest of your life, it would be the TGG triangle. I think it's the highest probability and it's the best risk reward pattern that you can get. There's an entire course that covers a TGG triangle on the website. If you guys are interested in joining the TGG fam full time and getting access to my entire curriculum, coming into the chat room every day, getting the text message alerts as well. If you can't be in chat, you can use coupon code SAVE25, so SAVE25, and I'm giving away 25% off on a 1-year all-inclusive membership plan. So you guys can click on the link in the description below. I do this sometimes randomly. We'll just go out and I'll just give a discount because today was TGG Tuesday and we open the chat room free and people come in. And we had a real nice active day in chat today. We had some really good conversations with guests and members, and they were all interacting really well. So I figure, why the hell not? Why the hell not? And whenever I do something like that, I extend it to the YouTube community. So I love you guys. You guys always show me a bunch of love. So if I can like your YouTube, I would. But like I said, so I want to make sure that I extend that offer to you guys. So again, SAVE25 at checkout, and that'll get you 25% off the 1-year all-inclusive membership. Will get you access to all the courses as well as all future courses coming out down the road. There's no upsells ever. You guys get access to everything. So getting back to this MGEN. All right, let's talk about levels. TGG triangle setup. But in this sense, it was a TGG triangle based off of yesterday's high. Usually when you guys see me talk about a TGG triangle, the traditional TGG triangle pattern is based off the initial morning high. But it can still also be used off prior day's highs. There's yesterday's high. We broke through yesterday's high with a nice increase in volume. Okay? Nice increase in volume. What I do now, we draw Fibonacci retracement levels from the low of the day up to the high. And what do we start to notice? There are two key support levels that I want you to identify. Okay? There's two key support levels I want you to identify. Let me bold the fib levels a little bit so you can see them more clearly on your screen. There's two key levels I want you to recognize. Your first level is going to be your primary level, and that is your previous high of the day, or the yesterday's high, excuse me. See how it lines up dead even with the 38.2 Fibonacci level? You also have the trade line lining up at that area also. So now you have three support indicators, the 38.2 fib level, yesterday's high, and the trade line all lining up at the same area, which is right around 162. That's your primary support level. All right. Now, if you came in here and you drew a line across yesterday's high and you got long maybe somewhere in here, if you're getting stopped out on that tail, you're not identifying your secondary support level, because there's a secondary support level here on MGEN that I want to point out to you that you need to be aware of so you can properly set your stop loss. Okay, now that's your primary level, right? Okay, this solid line I just drew on my screen, that's the primary level. Let's actually make it a color. All right, let's do blue. Okay, that blue line's your primary support level. But now, where else do you see support? There's a secondary level here that I want you to recognize, and it's right there. Right there, you have the 50 Fibonacci level, and it lines up with VWAP perfectly. So you've got a primary level up here around 162, and then you've got a secondary level right down here at 155. Okay, here is your secondary support level, and I'll make this one, let's make this color, let's do purple. Okay, or yellow, let's do yellow. So here now your primary support level is blue with the yesterday's high, the 38.2 Fibonacci level, and the trade line. Your secondary support level is the 50 Fibonacci level, and it lines up perfectly with VWAP. So if you are long in here, you need to know where those secondary and primary support levels are so you can set your stop loss in the correct spot. There may be people watching this video that got stopped out right there and then saw the stock do this up to $2, and you're saying, what the hell? I have such bad luck. It's not because you have bad luck. It's because you're not identifying your primary and secondary support levels, and that's the purpose of this video. So once I saw the stock hold, I wasn't long in here, but once I saw the stock hold the secondary support level, that's when I started to try to get long. I was bidding all down here, guys. I was bidding 158, wasn't getting filled. I moved up to 160. This candle is actually a low of the candles, 160, but I didn't get any shares. I was sitting at 160. We printed 160. I got nothing. Not a lot of shares went off at 160, but I didn't get any fill. And I kept moving my bid higher until we started to get to the inflection point of the TTG triangle, which is the break out of the downtrend line. And I'm like, man, shit, this thing's going to go. So I just moved my bid all the way up to high bid at 167, and I got a partial fill. I only got 9,000 shares there. I was trying to get much more, but I only got a partial fill, even though I moved up high bid at 167. I'll take you guys to my trade announcement. You can see here I'm long MGEN at 167. All right, again, a partial fill. We pushed up to the high of the day. My first take profit was right in front of the high of the day at 180. So here you guys can see took some profit at 180. And now at this point, I have small size because I got a partial fill. I just took some profit off in front of the high. I'm looking to add to the position. Then we get a nice pullback into this trade line area, and the trade line holds support. Once I saw the trade line hold support, I said I'm going to add to the position here. But the key to me adding to this position here was that volume increase right there. When you get a break out of a TT triangle pattern like this, you want to see an increase in volume on the break out of the triangle. If you get an increase in volume like this on the break out of the triangle, the chances of the high of the day breaking it increases. So the stronger the volume on the break out of the triangle, the stronger the chance of the high of the day being broken. If the volume out of that triangle looked like this, the chances of that high of the day holding and the stock pulling back in is higher. So when you have volume like this, you look for the high of the day to break. So that's why on this red candle, that quick little pullback, I added back to a full-size position, 178. I'll take you back to my announcement. You can see here I added back at 178. And then we got a really nice break through the high of the day. The trade line held, and we just kept pushing up towards highs. I took some profit off right there at 190. And then I sold the bulk of my position right there at 195. Back to my announcements. You can see here 190. Took more at 195. And I held on to one last small piece in case the prior high of the day, which is right there, in case that held. And if that held, I was going to see if we can push maybe up closer towards, excuse me, if we were able to break up above $2. But why did I get the bulk of my position off the table in front of $2? Let's go to the daily chart and find out. Okay, the reason why I got the bulk out of the bulk of my position in front of $2, we go to the daily chart, zoom out, look what we have here. Boom. Key support level in June, July, August. Okay, so there's a key support level. You have to know where these levels are, guys. When you develop your game plans, you have to know where your key levels are on the daily chart. It's not a coincidence that you have that support level, prior support level at $2. It's not a coincidence that that's the high of the day, and look at that resistance on that big tail. Okay, so that's why I wanted to be out of the bulk of my position in front of $2. That's why I started scaling out of my position right here and then more right here, just in case that we did not break. And that's why I got rid of the bulk when I did. And then if we broke through it, then I would have been in a piece of my position, and great, I'm still in the trade. But if not, which is exactly what happened, we ended up pulling in much deeper later in the day. I'm already out the bulk of my position up here because I know where those resistance levels are, and I'm taking my profit accordingly. All right. So again, moral of the story here, guys. It's important that I get a lot of lessons in this video. A lot of lessons in this video. All right. You got a variation of the TTG triangle with prior day's high. You've got understanding the volume on the break out of the TTG triangle. And you've got a great lesson on primary and secondary support levels. If you're getting stopped out of and then trades continue higher without you, it may be because you're not recognizing those secondary support levels. So when you're conducting your technical analysis, make sure that you conduct it completely and fully. Don't half-ass it, complete it, identify where all the key levels are, and then make your trade plan, your game plan on the trade, make it around those levels. But if you're missing a level, which is a key level, your game plan is going to be off. So make sure you complete the technical analysis, primary, secondary support levels. I hope you guys enjoyed the video. Again, make sure to hit that like button for me, comment below, and make sure, most importantly, flip that notification bell to make sure that you are notified every single time I post up a free video like you are seeing here now. And then again, don't forget, coupon code SAVE25 to get 25% off that 1-year all-inclusive membership. Get access to all of my courses. I'll see you guys in chat tomorrow. Take care.